Jeff Ciachurski started Western Wind Energy from scratch and sold it a few years ago for $430 million, making shareholders a ton of money along the way. His latest company is Greenbriar Capital, which owns renewable energy projects in Canada and the United States. Here's our talk with Jeff. So, Jeff, you sold Western Wind for a lot of money a few years ago to Brookfield. You made investors a lot of money over the years. Now you've got Greenbriar, and you think you've got a A1 all-star team. Why do you say that?
Well, you need a gold medal team, Mark, to make things happen. And we put together a group of guys that have been pioneers in the business. They go back 30 years in the industry when the industry really started. So if you go back, it was really a hobby. You know, you looked at Popular Mechanics, you saw a guy with a small house and a solar panel or a windmill. It was a hobby, and now it's obviously not, it's not alternative energy anymore, it's mainstream energy. So what we try to do is we try to differentiate ourselves with the market by going for high yield, high impact targets in the space.
Now, one of the deals you struck, or as part of that Brookfield deal, you got an asset in Puerto Rico. You call this a high impact renewable contract. What does that mean?
Basically, there's two components to it. So a high impact contract originates in an area that makes really expensive electricity. So it burns oil. It puts it in boilers that are 50 years old. Hawaii, for example, the customers pay 43 cents a kilowatt hour US. You're probably paying 10 cents here in Ontario. So they're paying on a Canadian equivalent, they're paying 600% more for their power. Therefore, if you're doing a solar project in Hawaii, you're going to get 20 cents a kilowatt hour as a developer and owner-operator. If you did that in Arizona, you're going to get paid 3 cents a kilowatt hour. So there's a 700% premium by being in Hawaii. At the same time, you're not worried about political backlash because you're still selling power at less than half the price what consumers are paying. So that's what would be called a high-impact market. Now, what it does for the shareholders is instead of diluting shares, having to sell shares to pay for the equity piece, all projects require equity, they require debt. In this particular case, you don't have to sell any corporate equity, so it avoids dilution. You're doing everything at the project level, including getting an equity loan. It's able to finance the complete project, you make enough cash, it flows up to the shareholders, and you deliver for the shareholders what you're supposed to be doing as a public company president.
Right. Now, we know that Puerto Rico was basically devastated by a recent hurricane, but in a perverse way, in the way business works and governments work, it actually has worked out pretty well for Greenbriar. So what's the best case in Puerto Rico for you, and what's the worst case?
Yeah, so you definitely don't want a hurricane to make your business model work. We truly wanted the federal government to take over Puerto Rico 7 or 8 years ago. What Hurricane Maria has done is in fact, the federal government is in control of Puerto Rico. It's taken over the utility. So we had a credit rating in Puerto Rico, probably double D. Now the credit rating's AAA. So our counterparty in our $2 billion contract is the US federal government and not the local utility. How that translates to kind of like value, you know, I've been in Puerto Rico since 2008. And in 2013, Puerto Rico started having credit issues. 2015, we worked with the utility. We got to a point where we needed to litigate to protect our position. We've won every battle in court since that time, and the judge ordered a damage report. We've got a $191 million damage valuation issued on the court on our behalf. $191 million is great. We only have 16 million shares outstanding. We prefer to build a project. So the project would bring us $58 million a year in revenue for 35 years. At the same time, creating 1,100 jobs, putting $360 million into the economy, and $12 million a year of taxes. So we prefer to build a project than to collect the award.
Let's shift gears and go overseas to this Gauzy acquisition that you made. You're excited about this smart glass, and you say it's similar to what the state of solar in, say, 2002 or so. So what is smart glass? Why is it important? Why is it important for your company?
So when you're in the renewable energy business like we have for the last 15 years, you learn that what's better than renewable energy is energy efficiency, energy conservation. So on our background, our research, we found a company in Israel who makes an innovative smart glass product, which basically, in the flick of a second, it turns any kind of glass medium from opaque to transparent, anywhere in between, within a tenth of a second. It's got a huge impact for the environment on energy.
And what's your strategy with smart glass?
A strategy is basically on a very high level pattern is to work with, we are working with big sales organizations, companies that have 10,000, 15,000 salespeople who market a certain set of consumer products, and we've introduced our product into their basically their product line, have them do the sales. So really it's a classical distribution model. There's no capital expenditures required from us. We simply get the product from Israel. We sell it anywhere in the world on an exclusive basis. If your reference back to energy, 16% of all energy in the United States is consumed through the window. So it's basically air conditioning systems that are removing the heat that's coming in from the thermal energy. So what you get is you get a smart glass solution, reduces the energy load in a building, and at the same time you don't have to buy drapes or shutters or blinds. You can adjust the windows just like you would if you had physical drape, shutters, and blinds. You do it electronically. It's where solar and wind was in 2002. It's got a great growth pattern that we're excited about.
And lastly, Jeff, viewers are wondering, this is all very interesting, but are you making money? When are you going to make money? And what do the financials look like?
Yeah, so there's a couple segments. So on the renewable segment, with the feds now taking over Puerto Rico, we don't need to raise capital to pay for the project. So once the official handover takes place, which we expect within the next 60 days, where you have the federal government running the utility, we expect to finance, with a AAA credit rating, we'll finance that completely at the project level. So we expect that to add a couple $100 million to our market cap. On the Gauzy situation, we're doing things on a top level approach. So we just had the deal approved like 3-4 weeks ago. That project will move out to these different sales forces. So we're kind of anticipating 2 years, about 30 million in sales from Gauzy, and about 58 million a year from the solar project in 2 years as well.
And you want to say one more thing to wrap it all up with a bow?
I think you're buying management. I think you're buying guys that have been in the business right from the beginning. You're buying a company that has the top players in the field. There's probably 10,000 people that are involved in renewable energy. There's only 12 teams that can build projects from scratch and do it without any form of dilution. And we've got a great company, great team, and 16 million shares out, so we're looking after the shareholder more than anybody else.
A lot of companies say they use artificial intelligence because it's a hot buzzword right now. But VIQ Solutions walks the walk. They are increasingly using artificial intelligence, or AI, in their flagship platform. We spoke to the CEO, Sebastian Paré. Sebastian, VIQ Solutions, explain the business model. What do you do, and how are you different from other companies?
This is a very good question. So we came from a decade of providing digital recording technology for the justice market worldwide. We're a truly international company, and really, if you've been involved in that kind of market in the past, you'll appreciate that security and is absolutely critical to what we do. So cybersecurity has always been key to what we do. So what we ended up doing is taking that background, that pedigree, and that track record in security in the justice market, and we've been slowly but surely penetrating many other markets. So here we are today into a diversified marketplace where the same technology, the platform that we use to collect audio and video, and sources from all kinds of channels. So we went from collecting data on the audio in a courtroom using microphones to now we're collecting data from Internet of Things. So it could be drone, it could be cameras mounted in vehicles, it could be sensors, motion detection. So really what we do is the platform has evolved to a point where now it's creating an evidence, basically a movie behind the scene from all kinds of sources. And that movie, that digital content, is now being used for all kinds of purposes. So it could be in the courts, it could be in the context of physicians monitoring other surgeons, it could be about surgeons going through competency assessment, it could be interviews for immigration, interview for drugs administration, it could be all kinds of different settings, but the concept is the same from one market to another. We're basically collecting evidence and media content from an all limited number of channels, and we bring it all together into a secure way, and then we transport that data from the point of source all the way to a central repository. And then from there, we allow our customers to actually maximize the use of that content for all kinds of operational purposes. So mining the data is a big component of what we do today.
Sebastian, the last couple of quarters, you've had solid revenue growth, you're EBITDA positive, cash flow positive. Where's that coming from?
So we also have no debt. So the balance sheet is very clean. It came from an acknowledgement early on that we knew the platform was really solid, and it was a matter of investing in the right innovation. So we've been securing patents. We've been able to come up with all our mobility product lines. We came up with collaboration products. We came up with a military-grade edition version of the platform that we're now using with some of the agencies in the US. And all of that came from innovation and a desire to expedite and accelerate the growth. So a lot of that growth took place was based on those innovations and then the adoption of those new product lines into our customer base. And it really came from existing customers adopting new things, but also brand new customers onboarding into the platform. We've also shifted all our reporting towards recurring revenue because it's a big component of what we do now. And it also reflects the reality of where we are today and where we're going next. We've also switched to all US reporting for obvious reasons that internationally all our customers are actually transacting in US currency. So we've done all of that in the last 2 quarters. But yeah, we've been up to a very solid start this year, posting back-to-back 2 or 3 quarters in a row of 40% growth. And that has been outstanding. So now the word is starting to come out in terms of where does that come from, where you're going. And I think it's very clear that part of where we're going next is to continue to work with our existing clients on pushing the envelope. Because one of the things VIQ does is we can basically generate that content, secure that content, store that content with our client. And that content is a gold mine in terms of analytics and really leveraging that. So if you look at some of our press releases lately, you'll see that the trend is moving towards mining that data into new ways to allow our customers to finally unlock the power of the content that they're generating today.
The stock market can be a chaotic place. Do you want to stand out from the crowd? Watch Capital Ideas TV. Never be the last to know. Organic Garage's new store is under construction in Liberty Village in Toronto, which is one of the most densely populated areas in North America. We had a chance to visit the site and talk to the founder and CEO, Matt Lurie. So Matt, we're in the Liberty Village location, 13,000 square feet. This is a very cool, funky, up-and-coming area. So what were some of the demographic reasons, some of the major factors that drew you to Liberty Village?
Yeah, we like this area for a number of reasons. Number one, the population density in the Liberty Village area is very high. A lot of condo dwellers, a lot of people within a half a kilometer, 1 kilometer radius, which is much different than a suburban store where you're looking at 1, 3, and 5 kilometers out. Also, a very high average household income. A large propensity are university educated professionals, and also a younger millennial style of consumer. So it was a great demographic for us, definitely some key targets that we always look for.
Just looking at the location, you're essentially street level, you're going to get a lot of foot traffic. What else is around here that is intriguing and maybe compelling for the customer?
I think a couple things. Number one, there is a Green P parking very close by. So in terms of accessibility, people can come and park safely. It's probably no more than 50 feet away. So that's very attractive. Also in terms of a large national grocer, it's one of their top spots in Ontario. So we know that there's a large volume of customers in terms of purchasing natural and organics in the area based off of their kind of historical sales that made the location that much more attractive.
So we've talked before that the Junction design location is going to be the template going forward, but this is a different kind of building. So what are some of the design features here in Liberty Village in this building that will be unique?
Well, some of the things we loved about this building is it's a 100-year-old building. So it has a lot of character existing that we don't have to recreate. It also has a lot of existing brick and wood beams. It has a lower ceiling, so it'll create a more intimate feel. So those are some of the things that will make it unique and different. And also when we look at our locations, we look at them like siblings. They all share the same bloodline, but they're all inherently a little bit different. So while this location will follow some of the design trends that we did in Junction, it will have its own kind of inherent feel, just like a family member would to somebody else. So yeah.
So Matt, you recently announced, Organic Garage announced a new program called the Handpicked Partner. And you're hoping to drive down costs, drive revenue. Explain it for us. Why did you start this?
Well, when we started looking at adding additional services into our store, we wanted to do it in a smart way that didn't add costs to our bottom line, specifically labor. And a lot of the things that we don't specifically focus on, like prepared foods, are labor-intensive applications. So we set out to create this hand-picked partner program where we could introduce different services that are not necessarily our forte, whether that be, for example, like a sustainable sushi kind of concept, or a juice bar, or a cafe, or even a restaurant. These are all labor-intensive applications. And we're not in that business, we're in the grocery business, but we want to bring people in that kind of jive with kind of all our culture and our listing criteria and our ingredient decks, and give these services or these hand-picked partners an opportunity to sell their products to our customer base. And in terms of from a shareholder existing and a new shareholder perspective, it should be very attractive to them, because not only does it drive more traffic into the stores, thus increasing the store sales, but it also drops our occupancy costs, because these hand-picked partners either pay a combination of rent or percentage rent, or it's a revenue share. So it adds a bottom line profit very easily.
Anything else you want to touch on we didn't talk about?
Yeah, I just think this Liberty Village store, it's in the heart of the city. It's a very heavily populated area. There's lots of amenities nearby, from different restaurants and things like that are driving traffic to the area. So from a walk by in terms of accessibility and things like that, we're excited because we think it's going to be one of our top locations as we expand, as part of our 416 strategy and growing the Toronto market. So I think it should be very exciting, once it opens.
The price of cobalt has soared this year, in part because it's needed in lithium-ion batteries to feed the surging electric vehicle market. U.S. Cobalt has a mine in Idaho, and it wants to capitalize on this multi-year megatrend. We talked to the CEO, Wayne Tisdale. Wayne, Cobalt has had a really hot year. I don't need to tell you that. I understand that you think, and many think, that there's almost a perfect storm going on right now in terms of the supply and demand situation. Explain that for us.
Well, it's quite simple. The governments around the world have suggested that we should not have any more cars running on the road with, and so they've introduced electric cars. And with electric cars, it takes batteries, and it takes inside the battery you have cobalt. And each one of those cars have anywhere from 5 kilograms to 8 kilograms of cobalt in that car to run it, to keep the charge going.
Can you give us some numbers in terms of the demand we're seeing? You hinted at the fact that governments are mandating that you have to have electric vehicles on the road by X amount of time, and so many companies are pushing in that direction. So give us a sense of the numbers and where the price may go with cobalt.
Well, the numbers are very, very large. If you read the FT yesterday on Volkswagen, they went out for a year's supply, which is 100,000 tons of cobalt for their new generation of car, and they couldn't buy it. The market just didn't have it. It just isn't in the market. And your cobalt comes from mostly the DRC. There's a few mines around the world. And of course, the problem we have a lot of major mines shut down around the world, like the Philippines shut all their nickel laterite mines down because of the pollution, and that took a lot of cobalt because it was a byproduct. And copper's been down a lot, and there's not big mines going in carrying the cobalt. So pure cobalt plays are hard to come by.
So you're in Idaho with the Iron Creek mine, which has been around for a long time.
Yeah.
So what makes this different? What makes it special?
Well, it makes it special because it was a project that was worked in the 40s. They looked for iron, and then in the 70s and 80s, Caminco and Noranda went in, basically looking for copper, and came across a large component of cobalt. And this particular ground is patented, so it's private ground. I was sitting, and a gentleman phoned me up and said, listen, I've got this project in Idaho, and I jumped all over it. I was looking at lithium at the time, and I thought, wow, cobalt. So I did a little bit of research and got involved in that. And we went down and tied down property, and it's patented ground. So we're not up against the permits that most people are in Idaho dealing with the forestry. So we're way advanced in that thing.
Right, and you mentioned that Noranda and Caminco have been there before. They've done a lot of work.
A lot.
So where do you stand now in terms of your exploration plans? And maybe you can give us a timeline as to what the next steps are.
Well, we went in and we opened up the existing ground. It had 3 tunnels on it, or adits, and what we did is we went in to reconfirm the historical value that they had left in their data, which suggested that we had 1.2 million tons of about 0.55 cobalt. And so we then spent this season permitting ourselves, opening up our tunnels, getting all the qualifications in place, and we are now starting to confirm that they knew what they were doing, and the results were there. So we've just we did chip sampling. We announced about 3 weeks ago. We've released 13 holes that confirms their work is in place, and we've now opened up all the tunnels, and we can now carry on our exploration program not only during the surface drills, but we can go underground and start drilling and expanding on that process.
So Wayne, what is a blue sky scenario for U.S. Cobalt, and what are some of the challenges and risks?
Well, the challenge and risk is always in exploration. You know, that's the biggest risk. That's why we're always in mining. The blue sky is that we're open on all ends of on the project, and I think having this underground drilling program for the winter will expand us to a greater degree. I mean, I don't want to put tons to it because it seems to, but we're looking to go for in that range of about 4 to 5 million tons. That's the goal that we're working with now.
And so, bottom line, you want to be part of this parallel universe of demand for electric vehicles and lithium-ion batteries.
Yes. Well, I mean, this is a crazy story. I mean, I don't know where cobalt will go. It could go to $200 a pound. It really doesn't matter. People get all saying it's 35 or 40 or 50. What's going to happen, because the government's implemented all these laws that you're going to have an electric car, they'll just pass that on to the consumer. So if Volkswagen can't get it and they have to pay $100 a pound for the thing, they will then add that to the battery charge and add that to the cost of the car and push it out. That's the big play. There is no big mines coming on at the moment. There's a little bit of work in the DRC, which everybody knows that's just a little bit of a crazy place to work, and it's also not very healthy for the child labor part of our thing. Our cell phone carries 10 grams of cobalt from some child labor that's been working hard in the DRC. And it seems that people are now becoming aware of it. And so we're looking for a source, which we've found in North America, that is permitted in our exploration plan. We don't have a big job getting from where we are today to where we could get into a production situation.
From the heart of the financial district in downtown Toronto, that's our show for this week. I'm Mark Bunting. Be sure to subscribe to our YouTube channel so you don't miss an episode. And for more great investment ideas through our weekly digest and morning note, subscribe to capitalideasresearch.com. Thanks a lot for watching, and thanks for investing like a pro. We'll see you next time.